Did you know that the average Canadian spends more on banking fees than our monthly Netflix subscription? That is right. So this episode is for all those that want to save more money in a fun way. Get more by doing the same. Yep, that's what I just said. Get more by doing the same. And KOHO is really optimizing how we do banking. So in this episode, I get to chat with Daniel, the CEO of KOHO. And honestly, we have a lot of fun. And he really kind of throws me for a loop when he talks about how we can get cash back for spending our own money, that he's developed a way with what the fee for us to find those hidden service charges, how the rest of the world outside North America is much more creative and innovative and transparent when it comes to banking and what they're up to. And we also talk about the KOHO office environment, scooters, and beer. Don't get me started. This is a great episode. I can't wait to hear your feedback. Welcome to the Can Innovate podcast, the first ever podcast designed to showcase Canadian thought leadership. These innovators share industry insights, entrepreneurial best practices, lessons learned, and other tips that we can incorporate right into our lives, our careers, and our businesses. So let's get inspired. So I've got Daniel Eberhard in the house, which is a phenomenal guy. He has built his career as an entrepreneur by finding ways to create scalable, mission-driven companies. Okay, let's just get started. The guy in 2010, he actually co-founded Kineticor Renewables that was actually acquired by Algonquin Power in 2011. And then after the sale, Daniel took the opportunity to backpack through Europe, and he saw firsthand the differences of the European banking system compared to Canada. And this whole experience inspired him to kind of deep dive and take a deeper look into the Canada's flawed banking system, which is interesting because around the world, everyone thinks we've got an amazing banking system, but he's found some areas. And in 2014, he founded KOHO Financial, Canada's first challenger bank, looking to help eradicate debt caused by a system fueled by hidden fees and interest rates. He's got an integrated app, reloadable Visa card, and KOHO is building the ultimate savings experience and leading the charge in the fintech space. And by the way, if you're still not curious enough about Daniel, he was also named Bay Street's Bull Top 30 Under 30, along with KOHO receiving the NASDAQ Award for Best FinTech Company. Welcome, Daniel.
Awesome. Thank you so much for having me. I'm going to let you do all my intros now. That's amazing.
Oh, I love it. Well, I don't even know where to start. It seems like you've just opened up Pandora's box.
Yeah, maybe. Hopefully, I think that we're just trying to bring some visibility into some awareness to some of the things that we do some things well in the Canadian banking climate, but there's a lot of things that we are really far behind at, and so I think it's hard to know that if you have only lived in Canada and have only looked at our banking experience, and so we're just trying to bring visibility and awareness to some of those areas.
No, it's great because I'm so curious to find out, how is the European banking system kind of different and compared to Canada?
Yeah, so if you look at how, first of all, it depends. European, there's a lot of different countries that fall within that ecosystem, but I would say if you look at historically how Canadian banks have performed, and to your point about us having a strong banking climate, we have a really conservative banking infrastructure in Canada, and that's been really useful in 2008 because our banks were really well secured. And part of the reason that I would say that they're really well secured is because they have very little competitive pressure, and that's great, and that's a really healthy part of the banking system that I think everybody's aligned on in terms of their ability to manage systemic risk. What is very different in Canada is a couple things. One, because we don't have a very competitive banking environment, the percentage of revenue that our banks make from fees is a lot higher than other developed countries. So that's a zero-sum game. Bank fees come from Canadian consumers. Interest rates come from Canadian consumers. High MER mutual funds come from Canadian consumers. And so because we don't have a very effective banking framework in Canada, what we often have is users bearing the burden for that really inefficient banking structure. So that's like the biggest thing that we're trying to address. And, if you go to Europe and you look at their percentage of revenue that comes from fees, it's just not nearly as material as it is in Canada. And the banking term for this is return on equity. And Canadian banks have just consistently outperformed those other banks on their return on equity. And if you look at credit card departments, like the return on equity is 50% in Canada, which is astronomical. And so that's what we're addressing.
No, I love it, because when I moved to England, one of the first things when I was getting my bank account, and I was like, wow, you guys don't pay any service charges for your taking out money, taking out deposit, whatever. And everyone looked at me in England as if I was the kind of Looney Tune, as in, why would you pay service charges on your own money? And I was like so flabbergasted.
It's really, really bizarre. And it follows through, right? Not just to like the fees and the service charges, but actually in terms of like the product experience and the payments experience. And, in Europe, for example, there's now regulation, which is called open banking, which means that users are in control of their banking and financial information so that they can share that with other companies and products at their permission, which then like help them make more informed financial decisions. In Canada, that's something that's been talked about for 4 or 5 years, and no real progress has been made. And so it's like the bank fees are one element of the ecosystem of the problem. The product experience and the visibility into the bank fees is another element of the problem.
I love it. So what exactly is KOHO? Because I was checking it out. I'm like, it's kind of a debit card, a cashback card, a roundup card. Like, I'm like, what? This is kind of really cool on multiple layers. Like, it almost feels like a video game.
Yeah, I mean, I think that's kind of the psychology. That it's funny that you point out to that, because a lot of our early devs were video game designers, and so I think that kind of comes through in our product experience, which is good. But so think of KOHO as an upgraded version of a checking account. So what we call it is a current account. So with KOHO, you get a Visa prepaid card. You can use it anywhere that Visa is accepted. It does all of the things a traditional bank account does. So you can use ATMs, you can have your paycheck land directly on it, you can pay your bills on it, you can pay your credit cards on it. I pay my mortgage on KOHO. So it has all of that core banking functionality. And then it has a bunch of stuff to your point that a traditional bank account wouldn't have. So for example, normal Interact cards in Canada, normal debit cards in Canada don't give you any cash back. We give you 0.5% cash back on everything you spend. We round up your purchases to help you save. We help you set savings goals. We give you, I think, which is a really important distinction, a spendable balance. So when users action spending decisions with KOHO, it's based on how much money they have to spend rather than how much money they actually have. So the whole sort of product experience is orientated around how do we make it as easy as possible for people to save, and then how do we just make it easy for them to make really financially informed decisions. And it's not about saving versus spending. It's just about making informed decisions.
So basically, let me get this straight. I get 0.5% cash back on whatever I purchase.
That's right.
So you're giving me money when I spend money.
Yeah, unlike every other debit card in Canada.
Yeah, I'm just trying to wrap my brain around it. Just trying to digest. Like, so seriously, that's amazing. And then you mentioned that if I spent, like, say, $28.47, you round it up so I can actually save more money?
Yes. So what we do is we take that other, in that case, 53 cents, and we put it towards your savings. And so it's just about continuously doing a bunch of small automatic things to build your savings. And what we find is that when we make it as easy as possible for people to do that, they do it really effectively. And I think it shows. And people with KOHO, save, what we're seeing is people save 17% of their income versus the average savings rate of a millennial is like 0 to 1%. And I think that's part of the reason that, our NPS is 80 and our app store is a 4.8 out of 5, because people really do recognize the value of savings and really, I think, genuinely need and appreciate the help. So we feel really lucky to get to do what we do.
This is brilliant. This is really brilliant because it's small things. Like, you're already spending money, you're getting a bit of cash back, but on top of that, you're rounding it up so it actually goes into a bit of a savings account, which is kind of really nice because what you don't see, you don't spend, right?
Yeah, that's exactly right. And, this is the classic psychology of paying yourself first, right? And that means like paying your savings or your future first. And where we ultimately, just to kind of give you a purview into where we want to go, is just developing a really clear relationship between the money that you spend and the value that that creates in your life. And what I mean by that is, if you go out and you have a lovely dinner with your friends and that you end up spending $50, but that brings you a lot of happiness, then like that's a really good place to spend money. If you go out and you spend $50 on dinner every night and it's not bringing you that much happiness, then how do we bring kind of awareness and understanding to like what dollars you're spending that are driving the most value in your life? And I think it kind of changes the relationship with which people think about their money.
Yeah, because it sounds like you're actually developing a healthy relationship with money as opposed to an unhealthy one. It's helping people see things, money's a little bit more positively.
Yeah, I mean, I think our purview on it is that there tends to be like a really overly simplistic binary relationship with money where you either spend money or you save money. But how we actually operate doesn't map to that very well, right? And we make 1,000 little decisions a day, and tens of purchases decisions a day, and so it's really just about how do we sort of automate as much of that as possible and do as much of that lifting as possible.
That is so cool. Now, out of curiosity, how did you come up with the name KOHO? Does it mean something, or is there a story?
Yeah, so it's not a great founder story, but I think maybe in some ways it is. Look, I wanted something that was short and phonetically simple and just like easy to spell and understand, and I think KOHO achieves that. I grew up in the Pacific Northwest, and so there is a KOHO fish, which is native to the Pacific Northwest, which is called KOHO. So there's a bit of that, but mostly it was really tactical in the sense that there used to be a hockey company called KOHO, KOHO. And as you know, if you go on Google and you search for something on Google and there's not sufficient search history, then it will autocorrect your spelling and will map you to a different web page. But because there is sufficient search history for this term, but no SEO competition because the hockey company was no longer active, we were able to hijack the SEO and rank number one in the first day. So it was mostly a mercenary decision, but it also kind of ticked a lot of emotional boxes for us as well.
That is brilliant and very strategic and smart. This is what I'm really learning about you, Daniel, because it seems that you're quite young. I mean, top 30 under 30 on Bay Street Bulls. You already had another company that you founded and sold, and now you've got this going on. So you are very clever indeed.
Thank you. We got a long ways to go at KOHO, and I always feel like luck is easily the biggest determinant in somebody's career and in their life. So, I feel lucky to do what I do.
Yeah, no, I think it's brilliant. I mean, I actually was looking at your webpage and I was laughing because I was like, I gotta ask them this question. Do you really have scooters at the office?
We do, and it's funny because I was not a proponent of scooters. I'm more like, the startup-y ping pong tables and all those kinds of things. They're fun and whatever, but it's not me. And so now we do have scooters, and we recently had an article come out, and I jumped on the scooter as a joke, and it sort of got shipped all over in the press, and so now people think I'm some scooter punk.
I love it because you also got the what the fee, and I love that name. So it kind of adds that kind of edginess to it, right? So I let's talk about what the fee, because I'm sure everyone thinks I'm saying what the F, but I mean what the fee is totally, again, something that everybody kind of wants to play with. Yeah,
so look, we kind of internally are saying what the F. So we wanted to, again, bring visibility to the just bank fees, which are one element of the things that I think make it pretty hard for lower and middle class Canadians to get ahead in Canada, or certainly don't work in their favor. And so we wanted to try and bring visibility to that. So we launched What the Fee. And so What the Fee is a service that we provide where you go to the KOHO website, you enter in your bank account information, you can revoke the information at any time and revoke the data at any time. And with that, you can we use our machine learning team and our data team at KOHO, looks at your prior 3 months of bank data and just tells you how much you paid in fees, both hidden and direct. And what we find is that almost everybody is really, really surprised by the number that they see. And so I think the two themes that came out of it are people are paying a lot more in bank fees than they expect. And the second one is people with the least money are paying the most in bank fees. And so, it's been a great sort of press story for us, but mostly it's been about just kind of helping people get some visibility and I think get some awareness and start a conversation.
It's great because it's funny. My dad and I were actually talking last week about this. My dad's all about shopping around, and he always believes that money is a commodity, that you should always shop around. And he always plays between the banks because he hates paying money for his own money, access to his own money, and it drives him insane. So when I was doing research on this, and I told him about the statistic that it's about an average of $159 in banking fees that Canadians paid to banks, he was actually kind of alarmed that that's quite a bit of money, and people could use that for their savings. So he was really surprised about how much we're really paying, and then the fact of the matter of how unaware that we're actually paying this money.
Yeah, and I would say that if you think about how bank fees are structured too, right? To get the no fee bank account at most banks, it means that you're paying $5,000. Like you need a minimum balance of $5,000. And one, just a lot of people don't have that. And two, if you do have $5,000, it's not best used in a savings account that pays you 0.1% or 0.2%. And so it's not just a question of the bank fees. It's a question of the opportunity cost with the money. It's a question of like the visibility that people have on the bank fees that they pay. And so, yeah, it's pretty problematic because if $159 is the average, then that means for everybody who has a no fee savings account, there's somebody who's paying $300 a year in bank fees.
Yeah, no, it's crazy because I was thinking about it. I was thinking average of 159. I'm like, that's actually about $13 a month, which is actually more than Netflix. So basically, you're paying your bank more than your Netflix subscription on a monthly basis, and you don't even realize it.
I love that. I love that comparison, and we haven't thought about it that way. Yeah, and I get way more value from Netflix than I do from Totally. Come on, who doesn't have Netflix?
And right. you share with your family and friends, right? So it's like it's amazing. So yeah, that's crazy.
And I think what's more alarming is if you look at how banks' kind of revenue has evolved was, it wasn't that long ago that banks only made 20% of their revenue from fees or from what they call non-interest revenue. Today, that's closer to 50%. For some banks, it's over 50%. So the trend line is pretty alarming with this stuff as well.
I can imagine. So for our listeners out there, I'm going to put the link for whatthefee.ca. It is awesome. I actually ran my stuff over, and my dad will be proud that I'm not paying. But however, to Daniel's point, I actually do have put some money in my bank account, so I'm actually, losing on the interest, and there's an opportunity loss cost there. So I'm not winning in this situation at all. Yeah, it's kind of like one of those things. It's like no win-win situation. It was funny. I was looking at, I was on a Facebook group, and one of the girls was talking about, she's like, trying to figure out how to reduce her cost. And it was really like I should have just taken a screenshot and sent it to you, but I wasn't thinking about it. I was like kind of interested in the conversation. And she was asking about who should she go to because she really wants to kind of simplify her life and really, have a little bit more transparency. So people are going, oh, you should go to Tangerine, you should do this, what that. And then as I was researching, I was like, hey, has anyone checked out this KOHO? And, and it was funny because people were like, no. And then I put the What the Fee link to it. And honestly, I got more comments about What the Fee than anything else. So you're definitely making a movement, that's for sure.
That's great. That's the idea. So I appreciate the support and you raising some visibility around it.
Oh, totally. It's too much fun. Now, out of curiosity, earlier on you were talking about the open banking framework that Europeans seem to have, because Europe seems to be ahead in a lot of areas, like even with the whole EU GDPR about the transparency and the privacy that you have and access on, where your information is being used and all that. They seem to be really driving and, being the front runners in a lot of these areas. So I was kind of curious a little bit to learn a little bit more about the open banking framework.
Yeah, so the basic premise of the open banking framework is really at its core data rights issue. And it's a question of, do we own our own financial data or do the banks own it? And how do we kind of navigate that? And my take, and I think most people's take, is that if I go to a bank and I make an informed decision about what product to buy, I get that financial product and they get the bank fee. There is no implied relationship where they also get to keep my data, and that's also, which then they can leverage and then use that data to sell me other things. And so with open banking, what it really means is a certain set of companies which have been approved through a regulatory process with your permission can access your financial data. And so the classic example of this would be, for some of the like an older one would be Mint. And so Mint right now, which some people are familiar with, just goes through and scrapes your bank account data today and kind of gives you a categorization and some fairly sort of rough insights into what your spending behavior looks like. If you had open banking, you could give a company like Mint permission, or Flinks, which is a Canadian company, and they could actually do a proper analysis that's not using scraping, which is a risky technology, to really understand the full sweep of your data and to help you better understand what your products are, what you're paying. It's like it's a much more advanced version of what the fee. Or you can use that to say, have them look at what's the best credit card for you. Or you can look at that and say, I already have an account at TD. I can now very easily leverage that data to open up an account at Wealthsimple, which will give me a higher interest rate on my savings account or what have you. So it really just puts consumers in the driver's seat by making a much more competitive environment around your data, whereas opposed to the banks kind of protecting it and siloing it off. You as the consumer have the choice and the right and the ownership of that.
This is brilliant. And I love how you're really kind of challenging the status quo and making things happen and staying on the forefront. Canadian fintech scene seems to be blowing up all over the place. Like, there's just so many different things that are happening. But from a global perspective, there's a lot of other stuff that's happening out there. Is there something that's really exciting you the most about the industry, or the possibility of the industry?
Yeah, I mean, I would say that the most exciting things are actually happening outside of North America, because I think we have a fairly established banking infrastructure here. A lot of, like, it feels fairly incremental what we're doing here. But if you look at what's going on in Asia and Africa, so in Asia, for example, through their main financial apps, which are not even necessarily banks, you can run your entire financial life, everything from booking an appointment with your hairstylist to booking plane tickets and it all kind of runs out of a hub gateway within an app. And so what they're doing is really impressive from a product and technology perspective that the geeky side of me really appeals to. But then if you look at Africa, what's happening is much like where we went with sort of landlines, and Africa has kind of skipped that whole infrastructure and went straight to cell phones. They're also skipping all this sort of traditional hub and spoke banking infrastructure. And so what that means is a lot of opportunities are opening up to bring sort of more financial inclusion into Africa through mobile phones. And there's a great case study, which is now a few years old, called M-Pesa, where a lot of these things are cash-based economies, and just even without smartphones now, with companies like M-Pesa, people are actually able to have pseudo bank accounts that allow them to participate in the financial system and allow them to get credit, and that kind of snowballs into just a more and more effective financial economy. So those are the two things that are like super exciting for me.
It's funny that you talk about Africa, because I actually was out in South Africa working out there in 2008, and I was blown away because everybody was using the cell phones to transfer money payments. And I didn't understand how that worked or anything, because back then that was kind of really a novel idea, right? And it's basically because they couldn't go to the bank machines because a lot of bank machines would get blown up. So how do they actually transfer money when they're working outside of South Africa to the families that are in South Africa in a safe way? And that's where they started doing it. And I was like looking at it, and there weren't smartphones. Like, they were really old kind of school phones, and they had figured out how to do this. And I was like, this is really, really phenomenal. And it's amazing when you look outside the world, outside of North America, how much innovation and how inventive they are. And it's usually coming from a place of pain or a challenge that they have driving things. So I get really excited when I hear these kind of stories as well.
No, it's that's exactly right. And it all, to kind of bring it back to Canada, that was now 11 years ago. You were in South Africa and people were texting money via smartphones, and still the main peer-to-peer method of transfer in Canada is like Interact e-transfer, where I have to log onto my account and it costs me $1. And we're the only ones who don't have a ubiquitous peer-to-peer free system in the developed world.
It's crazy. And even getting, like, now that I've launched my own kind of business, even getting money from the USA into Canada and to keep it in the currency that you want so that you could actually, it's really difficult. Like, it really does not actually play well even for the small business banking system. So the whole ecosystem, yes. So there's a lot of areas that we need to challenge and change here.
Couldn't agree more.
Oh, I love it. Well, we're going to have beer, drinks, or whatever. We can really debate this out because I've got some real big thoughts on these things. But out of curiosity, being that you've done so much, like you've been a forefront runner and you've challenged, when you started up your other company in 2010, and then you've got this one going on in 2014, like you've always been kind of the one that kind of trailblazes and is going forward and changing things. Do you have any advice for those that want to kind of go up against the Goliaths, like whether it's in the financial services or just challenging anything that's a status quo? Like, do you need some advice about that, or if they need a bit more courage?
Yeah. So I have a lot of thoughts on this. The first thing that comes to mind, and I think like the thing that I have probably done better than most things in my career, is I've just like picked meaningful problems. And what I mean by that is, as you talked about earlier, hopefully kind of the hallmarks of my career will be solving problems on a material scale, but also those problems being like worthwhile and driving value to my community. And so what happens when you do that is your emotional resonance with everybody that you talk to goes up. People want to help you. People want to support you. People want to, like, with capital or introductions or whatever. And so you just like, it's an advantage in that capacity. It's an advantage in the sense that which I do, if you get a lot of satisfaction from working around like really smart people and some of the best people can go anywhere, right? They all, like capital, money, all those things being equal, they have the offer. If everybody given the opportunity will solve for both their financial outcome and also for like purpose and value and meaning and fulfillment. And so if you pick like a really hard, meaty problem that takes a while, you tend to attract those kind of people who are like deeply invested in the mission. And because of that, the third thing is that you as a person and the people that you work with ultimately become much more resilient because you're getting pulled by the mission rather than just consistently pushing against it for like a narrow financial outcome. And so my advice to people is just like pick hard, meaty problems. And I think that's a huge part of the equation. And I think way too many smart people are solving really incremental things that don't actually move the needle in any way other than like a good chance of a financial outcome for them. And it just feels like lost opportunity.
I love it because it's so true. We got to challenge it. And this is how we're going to continue to innovate things. Just because something's always been there and it's a process does not mean we should not ask the questions of why it's there.
I would take it a step further. We talk about this sometimes at the company, but like, now we are coming along in a fairly established fintech, but for a long time, this was a really foolish kind of thing to pursue. When you're 5-10 employees and the banks have 40, 50,000 employees and are thousands of times bigger than you are. But the price of a really big opportunity is that you are misunderstood while you're grinding it out for the first 2, 3, 4 years, right? Like if everybody thinks it's a good idea, then it means it's too late and somebody's already done it. So there is just sort of a required counterculture DNA, I guess, that is an important part of I think finding bigger wins.
Aha, I love it. That is great. Now, out of curiosity, has there been some best advice you've ever received that you're kind of like, let's go?
I think the best advice I ever received, or the thing that I keep kind of coming back to, is what my dad always used to say, which is water off a duck's back, which is not particularly profound, but it's something that I've consistently relied on, and that I think that I drop negative things and hard things faster than most people. And there's there's dealing with the event, and then there's dealing with how you deal with the event. And I think a lot of people spend a lot of energy too far downstream on that thing. And so, and I'm by no means perfect at it, but water off a duck's back is the thing that I kind of consistently come back to when things suck.
I love that. I love that. You know, you're so right. We do probably spend and wastage calories on, you know, spinning things that we don't need to be.
Yeah. And the hard part, right, for a lot of us who think about being sort of higher performers, is the hard part is like challenging yourself to forgive yourself for making a mistake. And that is actually the non-intuitive thing to do, because a lot of type A's just kind of want to beat themselves up over and over again. But it's actually like, that's the intellectually easier path than just letting things go. And I'm, again, no means perfect at it, but it's the thing that I think has allowed me to accelerate a little bit faster.
Yes, and you bring the scooters in the office, so we should definitely pay attention to what you're up to.
That's right. Yeah, I got outvoted on that one.
Listen, Daniel, this has been brilliant. I mean, honestly, I'm so happy that you're challenging the norm. You're making this happen. We're having fun checking it out, especially the fee. You know, our listeners are going to want to know how to get, you know, be able to kind of get in contact with you or stay in touch with you. How can they do that?
Yeah, so the easiest way is on Twitter. It's probably the last social platform that I'm active on. So I'm on Twitter at DANEBS, Dan Ebbs. That's probably the easiest one. And but I really appreciate the chance to chat, and you're welcome by any time for scooters and beer or some combination thereof. And no, it's been great. I really appreciate the opportunity.
Perfect. I'm definitely coming for scooters and beer. I think that's a deadly combination, but I'm game.
Yeah, but we're challenging the status quo.
Oh, that's so true. Well done. Well, thanks so much, Daniel. You've been brilliant, and I can't wait to see how everyone else, the feedback we get.
Thanks so much. Appreciate you having me.
Thank you so much for joining and listening to the podcast. If you enjoyed this episode or any other episode, please share with your friends and colleagues. You can share on social media, the email link, the newsletter, and so on. Let's continue to support these Canadian innovators and help them really grow into bigger brands. Awareness and knowledge is totally key. Anyways, I can't wait to talk to you next week. Cheers.